the market is also factoring in a clear intent on the part of the International Energy Agency, which is the energy policy advisor for the OECD countries, and the U.S. And we heard from the U.S. President earlier this morning that he has authorized the release of strategic petroleum reserves. So right now, that's the twin realities, the knowns that the market is balancing.
If you look at the stocks at the top Asian oil buyers that import crude from Saudi Arabia, stocks they do have ample stocks, and Saudi Arabia holds stocks in Japan, so it's easy for Saudi Arabia to supply its Asian customers from the stocks that it holds in Japan. So there is no immediate supply risk for India right away. The concerns are not. India has diversified its supply sources quite significantly. I mean, Asia as a whole has diversified supply sources quite significantly. So for now, the concern will be more in terms of the impact on prices, because as prices go up and you're facing a not so strong economy, it's not going to be good for the economy and what that means for demand and so on and so forth going forward. But the immediate supply side concerns would not be too high at the moment, simply because of the diversification efforts and the fact that India can still buy oil from South American countries, from the U.S., and the Indian refiners have been trying out a variety of crudes at their refineries. Platts Analytics is expecting prices to be in the high $70s. And the reason for that is also we are entering a period of balances tightening. With IMO 2020 coming up, demand for crude is expected to go up. So we're generally entering a phase of tightening balances, and then to have this sort of a supply disruption. And like I mentioned, the geopolitical risk premium, I mean, this just goes to show how vulnerable Middle East supply can be and how quickly spare capacity can get eliminated. Platts Analytics estimates spare capacity to be 2.3 million barrels per day, and of that 1.6 million barrels per day sits in Saudi Arabia. So we are expecting to see the geopolitical risk premium come into prices. So we're looking at about the high $70s as we go forward.